Turning our attention to the cash budget, let's talk about some overarching principles first. First of all, the cash budget estimates cash flows. It is time-specific, and it involves different components. The good news, and that is the cash inflows into the firm, as well as the bad news, and that being the outflows. The cash budget ultimately allows managers to assess the feasibility of the operating plan. Can we pull off the coming year that we've created in terms of the budgeted income statement with the existing cash that we have? Or will we require some financing? So just like inventory needs at the beginning and the end of the accounting period, we'll have cash needs as well. We'll need to have cash on hand for that rainy day, as well as to leverage investment opportunities and to offset unforeseen circumstances. So now let's create the cash budget for Hogarth. We're going to start with cash receipts, or collections on revenues that we have earned throughout the accounting period. Again, Hogarth creates their budget on a quarterly basis. And when it comes to cash, you can think about a beginning accounts receivable balance, something that's left over from the previous year that's yet to be collected. And hopefully Hogarth will collect that in the coming quarter. We'll assume that they do. Now let's think about the current period sales. And when we think about quarter one sales, we had a total of $280,000. Now, Hogarth generally collects 60% of the existing or the current quarter sales in the current quarter and collects 40% in the subsequent quarter. So of the $280,000 in sales that were generated in quarter one, 60% or $168,000 is collected in that quarter one. The remainder, $112,000, is collected in quarter two. The same story applies to quarter two. In quarter two, we expect to collect 60% of quarter two sales, amounting to $192,000, and 40% of quarter two sales in quarter three, amounting to $128,000. The same story applies to quarter three and quarter four. Notably, in quarter four, of the sales, 60% are collected in the current year. The remainder, 40% of quarter four sales, serves as ending accounts receivable balance for the current year, and will be the beginning accounts receivable balance in the subsequent year. So, looking at the quarter totals yields $253,000 worth of collections in quarter one, $304,000 in quarter two, and so on and so forth. This schedule summarizes the inflows from revenues in terms of cash on a quarterly basis and allows us to know how much cash inflow will occur throughout the entire year.